Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how we use the higher time frame for what we call multi-time frame analysis. In other words, when we look at our charts, we don't look to take our trade setups, all our trade setups, we look to view them in the context of the large degree trend. For new users, we do have an STF indicator, which is color coded for trend, but like any other indicator, is lagging. So we want to have something that's leading, in other words, can give you areas of support and resistance on your chart in advance before the market gets there. So let's have a look at the ES for yesterday, which was the 4th of February. You can see we had a buy setup here that caught the very bar of the low of the day, and if I place the analysis on, market went up to the first target there, where the profit would have been 3.5R, and actually caught the very high of the day there as well for you. So very nice trade indeed. There's also a sell set up here a bit later, and I'm going to ignore the ones towards the end of the day because the market was so close to the, or so near the close, the trade wouldn't have had any time to work out. So you'd have probably wanted to avoid those. So let's go to the higher time frame chart to put these trade setups in the context of the higher time frame chart. Now, what we do is we go back to prior swing pivots. So that was our TS3 buy setup there. So even before it unfolded, we'd have gone back to the prior pivot here, placed the DP on, and you can see that would have given you a resistance area up there. Also, and this is more important, is that this is the last swing into this last low. There's a low there you can see on the 3rd of February, and we often get support or resistance on the swing or into the DP from the swing into the last high or low. So that would be an area of where we would have actually been looking for resistance as well. They actually overlap, so what I'll do is I'll just take the smaller one off. But can you see how that would have been on the chart in advance? Just want to also look that if we right mouse click here, this was actually a 1, 2, 3, 4, 5, 3, 4. So that low there was a wave 4, and if I just clear that off, as the market went up into this high here, that would have been a 5-wave sequence with the high of the day pretty much at the typical wave 5 WPT. So again, largely trend looked like it was up as that TS3 buy setup came in on the shorter time frame chart. So let's go down to the shorter time frame chart and have a look at that. There we go. There's our TS3 buy setup. At the time we hadn't reached this 15-minute resistance, therefore this would have been a good trade setup to take, and as such would have been a good one to go in the direction of the large degree trend up into that first target. First target was in the area of the higher time frame resistance, so it was a good one to take. As I've already said, that TS3 buy setup caught the very bar of the low of the day, and then the profit target, if I take that out of the way, was nailed pretty much the high of the day as well. So that was about the best any day trader could have wanted to do yesterday, catching pretty much the low and pretty much the high of the day yesterday. So it was very good indeed. As we've already seen, the result was a profit of approximately 3.5 times greater than the initial risk, where our correct position sizing kept our initial risk under 2% of a sample $20,000 account. So a very nice, good trade there to start off. Let's clear that off and have a look at this trade setup here, which unfolded a bit later in the day. Largely trend was down off this 15-minute DP high, therefore this would have been a good one to take. It was down into where? So if we go back to the 15-minute chart, that was the previous low, or that would have been the low that unfolded as the market was came up and started to come down. So we'd place the DP off here, and that would have given us an area of support. You can see the market didn't actually reach it yesterday, it just chopped sideways, but this would have been on the chart as the market started to decline down, so it would have been an area of where you'd anticipate the market was going to go down to. So let's go back to the 3-minute chart and let's put this in context. So nice higher time frame resistance, higher time frame support. This would have been then in the direction of the large degree trend, which would have been down, therefore would have been a good one to take. For you guys with more experience, you might have even considered this as a holy grail trade setup. Major high, initial decline wave 1, initial correction ABC into a wave 2. Therefore, you'd probably be looking to go into the typical wave 3 WPT for a nice 6-hour profit. Obviously, you had to get through this 15-minute support zone, so you may well have said, well, would it get there? that was an area of where you definitely think that support was coming in for a potential 3.4R. But either way, you'll be looking at this to be a good trade setup. However, the market had other opinions, and this is what markets do. And I wish more trading gurus and software vendors would actually show losing trades, because this is what happened. Market came down, would have taken you in, when it then went up and just clipped you out there, clipped you out for a couple of ticks for a losing trade. Now this is where position sizing is so important, because that loss would have been kept small at what we call one risk unit. So do you remember the profit we had up here? This was actually 3.5 risk units. So I placed the analysis on. There it was. So that profit made 3.5 risk units. This loss only lost one risk unit. And that's why we use correct position sizing, because even though you had one profit and one loss, the profit was much larger than the loss, and that's what makes you money over time. It's amazing how many amateur traders don't really understand this, that it's not the percentage of winners that actually is important. It's actually the size of the winners relative to the losses that's important. You can have a system that's only 35-40% accurate, but as long as your profits are 2 or 3 times greater than your losses, you'll make money over time. And actually that's far easier than trying to be right all of the time or have a high percentage of winners, because normally systems like that fall in a heap, because all it takes is one big loss to come through and you're completely wiped out. So that's why we use correct position sizing and why it's so important to keep your losses small. But anyway, I wanted to show this as a good example of, first of all, the large degree trend yesterday, to show how the market was going up nicely into that higher time frame resistance, which actually now the high of the day for you. Market then came down and we actually had a losing trade, so I thought it was very important to actually show a losing trade yesterday and show how the losses were kept small. But overall, even though it was a very choppy sideways day yesterday, it was a good day for MTPredictor, because that loss there was kept small. This profit here earlier in the day, which now pretty much the very bar of the low of the day, then came out at pretty much the high of the day, gave you the best profit of all of a plus 3.5R. So plus 3.5 minus 1 equals plus 2.5R overall. So hopefully you can see how our multi-time frame analysis fits in with our MTPredictor trade setups, and how we filter them in the direction of the large degree trend, and how our DPs are leading and on our charts in advance to give us potential areas of support and resistance. And even though the market just went nowhere yesterday, we actually had a very good day with this very nice profitable trade, which was much larger than the loss. So a good day overall for MTPredictor yesterday on the ES.